Strategy shocked everyone in their investor call today when they said that they do not plan to increase the interest rate on Stretch STRC above 12% at the current time. So that begs the question, can Stretch get back to $100 without dividend interest rate raises? Welcome to Drama-Free Bitcoin, where we have a calm and relaxed take on the Bitcoin marketplace. As we see in this slide here from the quarterly strategy investor call, they have a plan for raising Stretch price once below par, and also a plan called Cruise for when it's in the $99 to $100 range. So to get Stretch back to par, their plan is to adjust the USD reserve, maintain Stretch rate, and buy back Stretch. So adjusting the USD reserve adds more confidence to the company and to people buying Stretch. Maintaining the rate basically doesn't incentivize anyone to do anything differently, and currently the market's asking for a 13.5% rate, not a 12% rate, and their biggest competitor is offering 1% more. So maintaining the rate is a pretty bold move. Then finally, they can buy back Stretch, and I think this is the big one. They should have been doing that down at 28.5% drop, which was insane. But now they're authorized by the board to do this, and they've already purchased $25 million of Stretch back. Also on the call, they talked about attracting new people to Stretch and growing the demand. I think that's really important. They also said that raising the interest rate didn't seem to do much as far as attracting more investment, and that's partially because all the people that are already interested just got burned by the massive volatility. Instead, they are keeping the rate at 12%. They're going to start buying back Stretch when it makes sense for them. And they're going to keep that USD reserve really large, which gives them $1 billion worth of range that they're authorized to do, and also at least a year to cover dividends. And right now they're over 2 years, I believe. Once the price gets back to $99 to $100, if it does, then they plan to manage ATM issuance, which means they won't sell like crazy above 100. They might actually be a little bit more moderate about it, especially seeing how fast they want to grow the digital credit side of their business. They might adjust the STRC rate down to also dampen demand. And they're going to manage their BTC reserve, the USD reserve, the capital structure, and their capital markets policy. So all in all, a pretty big move. They're basically saying it's not worth it for them to increase the cost to all the outstanding shares that they have of Stretch by increasing the interest rate at this time. So they're going to maintain it at a 12% rate. And instead, they're going to try to increase demand, and they're going to try to buy back Stretch. And hopefully those two things will get us back to $100 par at some point. I am not so sure if that's going to happen quickly, but they said that this is their number one priority, is getting Stretch back to par. So I think we can give them the benefit of the doubt. And also they tend to change their mind every few weeks based on how the market reacts. So we will see if that happens. That's all for today's update. Remember, this is not financial advice, and you are responsible for your own choices. Please like and subscribe for more content like this, and leave a comment with your predictions below. As always, stay calm out there.